Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Thursday, August 26, 2021, just after 5:20 p.m. Central Time. So we saw the president hold his news conference. I was not enamored with what I saw. We lost 12 people today, 12 of our soldiers, as suicide bombers have been making attacks. It's middle of the night there. Have no idea what we'll wake up to. I don't see how we can commit to put more soldiers there to retaliate. It's going to be more, if we do retaliate, finding out where the leaders of this ISIS-K movement is and going after them with, be it SEAL teams, missiles, whatever we're going to do. We're done in Afghanistan, and that's the way to look at it. The question is, can the people get out? And I didn't understand when the president said he's going to get the people out that can get out. You know, the airport's surrounded with all these people. Are they not qualified to get out? I don't know. I don't pretend I know, but you can't tell me that they're not. And I do know the Taliban said that the interpreters for us and people that helped us, they're not letting them get to the airport. But I don't know what those people are there. So who knows? 100 and some odd thousand people have gotten out. I applaud that. I hate that we lost soldiers today, but it was probably coming in some manner or not. Okay, what's coming tomorrow, as much as that is sad, and it does weigh on me, as much as that is, we've got the keynote speech by Fed Chair Powell tomorrow, getting back to the financial markets. What will he say? I'm of the opinion, nothing. Nice speech. He's not going to tell you what he's going to do. I think he wants to see more data. How can he tell you he's going to make a change? Here is my thought process. Doesn't mean he can't. He can do whatever he wants. When the cases in America, the COVID, the hospitals are overflowing. Tents are now going up in different areas. There's no room in the hospitals themselves to handle these patients. They're dying at a record amount now a day. They're primarily non-vaccinated people, and he's going to change the financial policy. You may think he'll do that right now. I'm not buying it. I buy that they'll tell you what they want, when they want. I'm sure he's going to say that they're discussing things, and he'll leave it at that, is my guess. Now, what will that do to the markets becomes the question. You were down today, and you kept getting the market lower and lower as the news out of Kabul was coming in and weighing on the market. Markets have a way of shrugging that off and doing their own thing. So when we look at the S&P, if the market were to finish trading right this minute in the 525 area now, you'd be up 0.78, 34 points higher at an all-time high close. This is a weekly area chart of just closes. When you look at the daily bar chart, we've had a small pullback in the market. The trend, well, you've got a lower and low, higher high. You got up to an all-time high, but something else happened here. Now, you do see you had an outside day up yesterday. I have a rule, a set of rules, that if you take out within the next two trading sessions of this occurrence, that if you take out that low, which you did, until the high of yesterday's taken out, which is 44.98, it puts into play dropping back to the closest main moving average, period. The Bollinger Band will be above the market. I'll show you that in a second. This is where you're at. That number is 44, 44, 31. The 200 days here, the 100 is here, and the 18 is there. Those are the main ones. So I have a target there. I'm certainly not, I'm wrong, but it's a trap if you get back over that 44.98. But the pros, I think, are playing that momentum came out, the market wants to slip there. That doesn't change anything on this chart, but I thought I'd bring it up. The Bollinger Band. Look what's stopping the rally. Surprised? You shouldn't be, because you're overbought. You have an overbought market at the Bollinger Band. Now, I cannot count what today's numbers are doing because we don't know where it's going to finish up for Friday. But Thursday, both numbers were over 80, not the day before. So no matter what happens tomorrow, you cannot convert this overbought condition into an embedded one. So that resistance remains very formidable with support 44, 44 and a quarter, let's call it. In the NASDAQ, it's the same thing. You went up to the Bollinger Bands and the smart money, quote unquote, whatever that means. I know what it means to me. It's the players that know what they're really doing. I think their techniques, their systems, their algos, taking some money off the table there. Is the trend here? I don't count it a trend because you have a lower low, higher high. You can go to the weekly charts and see a better trend than you see here. But that's typical when a market's trying to figure out the next move and you have a big event in front of you. That big event, it's actually a two-part event right now. What's the first part of the event? The keynote speech tomorrow at the Jackson Hole Symposium that is all going to be virtual. What's the second? Jobs data around the corner. Those are the two big events we'll be looking at. When you take a look at the Dow, overbought market, stuck at the 18-day average, stuck within this trading range. So as a market analyst and a chartist, if you were sitting there and you're paying me a lot of money, what would I be telling you? I don't see opportunity right here. In the Russell, you still have lower highs with the action, lower lows, battleground between the 18-day average, the 100, back and forth. It looks just like the gold chart if you go and take a look at it. It's pretty interesting what it's doing there. Any close under 2209 gives the market the bias down. It'll probably turn momentum down. You'll be back into a downtrend. So this market tomorrow is a very important day in that particular chart, as I see it at least. In the bond market, we've now come back from the 125 area, and yields are actually now back into the mid-130s. You can see how the market's moving down here. The pattern, though, is a higher high and lower low, just waffling back and forth as I see it. In the VIX cash, well, the market held on. It got under, as we can see right here, the 100-day and the 18, but the whole play started here when the market challenged the combination of the upper Bollinger Band and the 200-day average. And as I told you, I thought the pros would grit their teeth, write calls, be ready for pressure that each time that happens, they get, and then the market has been coming back to the main 18-day average of closes. Can't argue that that's been happening, and I've been talking about it. Now you're back in an uptrend, which is bearish the stock market. You have higher lows, higher highs, momentum is turning up, and the bias is up. Until this market takes out 1646, who's in control? The bulls. So that's something else to plug in. You know, tomorrow, obviously the keynote speech is going to be the main thing of the day, unless we wake up in the morning and for that short while we'll be enamored with Kabul again, which I hope doesn't happen. Slow stochastics, momentum down, all this down. Be careful, you're approaching the lower band in an oversold condition. So a climax day tomorrow could happen in one way or the other. I'd be watching it very carefully. Dollar index, do you disagree that the failure happened at the upper Bollinger Band? As I said, I thought the smart money, as it was going up, that's where they were coming out. And I catch people always writing to me, oh, yeah, there's Ira, the market's making new highs on the whole move, and he's talking bearish. Well, all the market did is, by the way, that wasn't bearish. I thought the money came out. Now the question is the money going to come into the market? Any move over 93.14 is bullish. Any move under 92.80, let's call it, is bearish. I think tomorrow's the big important day. You got to keep your eye on it. What do you think is going to happen in the eurocurrency? Well, you're stuck at the 18-day average. The trend is up, the bias is up, and momentum's up. I wouldn't give you 2 cents for the dollar or this until we see what Mr. Powell says and how the market initially reacts to it. In the British pound, we're back into the full-fledged bearishness. Lower highs, lower lows, momentum stopped correcting, could be turning down, and the bias is down in the market. Now, you had an outside day down today. When you have that, if today's high is taken out, you lay a bear trap and the market likely goes back to the 137.98 level. Don't take it out. You're putting into play the 136.20 level. We'll see what happens there. In the Brent versus WTI, I think my explanation yesterday about us selling oil from our strategic reserve, how we're going to be seeing very shortly our refineries getting ready to turn over their maintenance schedules now as they convert from summer blends to winter blends. That's what's going to happen there, and that's less demand. So you're putting more supply out, bit for a short time, less demand. Well, what does that do? Doesn't put demand in the crude. You know that. So in Brent you can be up, but in WTI it's a lot more pressure. And that's how I'm reading the market. Overbought, no trend, sort of stuck right here at the 18 and the 100-day average looking for direction. Heating oil, overbought as can be, had this big up, a vertical rally that was sharp here from under the 190 level back up to the 212 area, and now settling back into the 207 zone. I just don't see anything clear on the market. Nat gas today, all the market, yesterday I was on Bloomberg and people asked the two trades that I was liking, going into the end of the year. Nat gas was number one for me, copper was number two. And I told them, I said, all you need to do is see, the demand isn't changing for this nat gas. Worldwide, it's tight as can be. Then you're going to get demands from the heat. Then you're going to get demands from the cold weather, and supplies aren't picking up. Well, you went right up to the Bollinger Band today. I smiled all day as I was looking at that. During the day, we get a lot of plays in the market that you can imagine are back and forth. And traders are often looking for, where's the resistance on this rally, the break, where's the support in it? One of the popular mathematical formulas, and your charting service probably carries it, it's called a pivot point. And you're looking for a center line, I'll hit this for a minute, the white, and then points above it is resistance, and points below it, like this one, there's generally two below it. Now in FX trading, sometimes they'll use 3 or 4 deviations out. But in most futures and stock and spider markets, they'll use 2. I tie it together in my video series, and it's free to you, how to use it with momentum and put together a game plan so you can see as it gets up to a point, is it overbought or is it picking up momentum up there as well? Go to our website. Under free offers, you'll be able to get this and other indicator series that I have. Those are free. You have a good day.